Purchasing a vehicle for your business is very straightforward until it comes time to recording that transaction in QuickBooks. Then you're dealing with not only recording whatever down payment you sent, but also making sure that the fixed asset and liability accounts are set up correctly. So with that in mind, I'm going to go ahead and walk you through this process step by step so that all of your reports, all of your transactions are correct from the get-go. Now, for the case of this example, I went ahead and made a $10,000 down payment against the vehicle that I purchased, and I made that payment out of my checking account. So before we get started, I'm going to show you how that shows up in my bank feed, okay? So if I go over here to bank transactions, I can see here I have a $10,000 outgoing payment to Toyota, okay? Now, if you are seeing a transaction like this hit your account, and maybe as a business owner, maybe you didn't use your checking account, maybe you used a savings account, or maybe you even used a credit card to make your down payment. The overall process here doesn't change at all. This is just, for the purposes of this example, I have chosen to make this payment out of the checking account in my business, okay? So when you see this transaction come up, it might be tempting to classify it right away. I encourage you to go ahead and hold off on that because we want to make sure that we have the framework for this particular transaction, the purchase of this vehicle, in correctly before we do any of that, okay? Now, the easiest way to record a vehicle purchase is by doing a journal entry. So in order to record that transaction, I would want to go ahead and go up to the plus create button and then go to journal entry under other, okay? Now, one thing to keep in mind, you will of course want to go ahead and make the journal entry for the day that you purchased the vehicle, okay? So for the purposes of this example, in my little sample company here, this vehicle was purchased on April 14th of 2026. So I want to go ahead and put that date there. Now for the journal entry number, this is something that I would like you to go ahead and just take a few minutes to consider. There are multiple different approaches that you can take. You can just go ahead and leave the default journal entry number in there that QuickBooks puts in. You can create a naming convention. So if this is something that you're going to be doing on a regular basis, let's say that this is a journal entry for payroll instead of for a vehicle purchase, which is probably more of a one-off situation, not something that you're going to be doing all the time. For payroll, you might put PR and then an 8-digit date code. Like I said, this is a vehicle purchase. This is going to be kind of a one-off item. I'm not going to be seeing this a lot. So what I would probably do for me personally is I would probably put in my usual journal entry naming convention, which for me, so that I kind of have my own little thumbprint or signature on it, is AM for accrual mistress, and then the 8-digit date code of the day of the transaction that I am doing. Okay, so I'm going to put in 2026-04-14. Okay. Now, here is where we get into the nitty-gritty. When we are doing a journal entry, this section right here, this grid, is where we are entering all of the details for where we want the various elements of this transaction to be mapped, okay? It is very important that you are very careful with this data entry because journal entries can go into accounts that some other transaction types can't. So you want to be very sure that you're doing all of this with intention and very, very methodically, okay? So for the purchase of this vehicle, I'm actually going to have to create a new asset account because since this is a brand new vehicle to me, to this company, I don't have an asset account on the books for this just yet. So I'm going to go ahead and say add new. And then I'm going to add, I'm going to say add new, and then I'm going to add the new account for this vehicle purchase. Now, since this is going to be my fixed asset account, I want to go ahead and pick a name that will quickly and easily allow me to identify what vehicle this is, in case I have multiple vehicles down the line. So first and foremost, I'm going to put in 2026 Toyota Prius, okay? So that is the year, make, and model. Now, I will say this, if you are a company that's going to have lots of vehicles on your books, for example, I work with a couple of construction companies and they have, half a dozen to a dozen trucks on their books at any one time, and they're constantly having to purchase new trucks as they wear out, right? You might want to even go a step further with this naming process and include something that is very unique to the vehicle. So you might want to put dash and then maybe the license plate number or the last 5 digits of the VIN number if you have it, okay? And since I do have a sample purchase document with that information, I am actually going to go ahead and just add the last 5 digits of this VIN number just to be on the safe side, okay? Now, again, why would I possibly want to do that? I just want to be sure that I know exactly which vehicle I am looking at on my balance sheet at any given time. For the purposes of this sample company, this is likely going to be the only vehicle on my books. And if I get rid of this one, I will probably be purchasing a new one and it'll just be a swap out. But if this is something where, again, you're going to have a lot of vehicles, this is going to be the best way to ensure that you're never confused about what you are interacting with. Okay? So now for account type, we're going to be saying fixed asset. And then under detail type, we want to be sure to pick vehicles. Okay, so we have an actual vehicles option. Now, the rest of this here, we're probably not going to be putting anything into since we are now going to be recording the other portions of this transaction. All right. So I'm going to go ahead and say save on this now that I have it in fixed assets and under the correct detail type. And here we are. We now have that account. So now in order to increase that asset account, I'm going to put an amount in the debit section here. Okay. Now I have my purchase document up on my other page. I will be attaching it to this journal entry and I can show you what that looks like in just a moment here. But for right now, I'm just going to be looking down the price information and everything and pulling information over. Now, on any purchase document, you might be dealing with more information than just the actual purchase price of the vehicle, right? The dealership might also do the registration for the first year as part of the purchase, and that might all get lumped in here. So keep an eye on that because it is possible that you might have to create multiple line items to get this recorded, okay? So that is actually what happened over here. I had the vehicle purchase amount less $640 for the annual registration. So I'm going to go ahead and do that math really quickly here. So the vehicle purchase price for me was $40,093.34. Okay. Now in the description, I would want to put what this is for. So I'm going to put vehicle purchase. And then I'm going to just put that little line to delineate. And I'm going to say 2026 Toyota Prius. Okay. Now what's cool is as I go down, it's automatically going to put that description in each line item, okay? So now, like I said, we have lots of things going on with a vehicle purchase. One element of this is the vehicle registration. So I'm going to go ahead and I think I'm going to have to add an account. Yeah, so I don't have anything for vehicle and I don't have anything for car and truck. So I'm going to go ahead and add a new account. For car registration. And the account type for this one will be an expense account, actually, okay? And then I'm going to make sure to put it to auto. There it is. That is the detail type here, okay? So I will go ahead and hit save on that. I'm going to put in the 640. So now this is a point where I might want to stop and double check. Okay, I have these two different sections of my vehicle purchase so far. I have the actual amount that is going to the fixed asset account, and then I have the amount that was for car registration. I might want to pause here and make sure that this matches up with my total purchase price on my vehicle, which is $40,733.34. So I am all set here. I am now ready to record the other half of this transaction, okay? So something to keep in mind whenever you're doing a journal entry, your debits and credits always need to match. So they always need to come together on all of this. Right now, I have two different options for how I could finish out the rest of this transaction. I could either create a liability account and put the entire balance of this $40,733.34 to that liability account, Or I can do one line item for $10,000, which would be the down payment that I made on this car. And I could do a second line item for the amount that I actually financed and put that to the liability account. Okay, so I ended up financing $30,733.34 for this transaction. One way or another, my liability account is ultimately going to be accurate because here's what's going to happen. If I put the full amount to the liability account and then put that $10,000 to the liability account from my bank register, my balance is going to come down to that $30,733.34. Okay. But I personally prefer, if I have all the information up front, to record a line item for the down payment that is going out and a line item for the liability. That way, when I am looking at the liability register later, I see the opening balance in that liability register as being exactly what I actually financed. Okay. So how do we record the payment? Well, the down payment, if I'm going to be recording that, I'm actually just going to map this to the business checking account, which is right there. So I'm going to put $10,000 there. And since I am going ahead and recording this like this, I'm going to have to match that in my bank transactions tab instead of adding it. And I'll show you how to do that. Now, what I have to do is I have to create a liability account for the remaining balance that is due. So I'm going to say add new. And again, for account name, we want to do something that's going to be very, very quick and easy to identify so that if we have multiple vehicles or if we have multiple loans open, it's going to be easy to identify the loan that we're working with so that if we're classifying payments or doing anything like that, it's easy to see if we get off track. So again, I'm going to do 2026 Toyota Prius loan. And then this loan happened to come from Evergreen Toyota Financial. So I'm going to add that. Okay. So now for the account type, this is a liability and it is a long-term liability. I believe that for this particular note, yes. So for this particular example, the loan term is 60 months. Remember, anything over a year is considered a long-term liability. Anything under a year is considered a short-term liability. So I'm saying long-term liability, and we can go ahead and leave this as notes payable. That's just fine. I will go ahead and hit save here. And you can see it automatically filled it in with the remaining balance that needed to be recorded for this transaction. Okay. And that is correct. That is what my purchase document shows that I financed. So this transaction now is technically complete. Now, like I said, one thing that I personally really like to do, and I really enjoy this as a feature of QuickBooks, especially for transactions that are things that people might have additional questions on, right? When I get to the end of the year and I'm filing my taxes, my CPA is going to want documentation on this purchase. So I can save myself a little bit of a headache now by simply going ahead and attaching this documentation. So I'm going to go ahead and drag and drop the purchase documents for this particular transaction. Okay. Now that I have this all entered, I have my documentation attached to it, I can go ahead and hit save and close. Now, the first thing that we're going to want to do is we're going to want to go ahead and match up this transaction right here. And we can see it automatically recognized that transaction and popped this up as a possible match. Now, I know that this is the journal entry that I just did, so I feel comfortable going ahead and classifying this as a match. If you have multiple matches, definitely go in and make sure that you are matching it to the journal entry that you recorded to show the purchase of the vehicle. Okay. I'll go ahead and hit match here. And that has now taken care of the transactions that are in play for this purchase of the vehicle. Let's take a moment and go and look at our balance sheet to see how this all shook out and was reported there. Okay. If I go over to reports and then standard reports, and then click on balance sheet under favorites, I can now see that under fixed assets, I have this Toyota Prius, and that is the amount ultimately that I purchased the vehicle for. Remember, that's less the registration fee, okay? And then under here, I now have the Toyota Prius loan from Evergreen Toyota Financial, and that is the correct amount, okay? Those are the things that we would be wanting to look for. Now, once again, if I had just recorded the full $40,000 to the liability account, I could have taken the $10,000 from my bank feed, my bank transactions tab, and just classified it against this liability. But by not doing that, this is the only transaction showing up in that liability register, meaning that that beginning balance is going to be exactly, completely spot on. Okay, it really is 6 of one, half dozen the other, because ultimately the balance will be correct. We would just be showing that $10,000 down payment going against it. But it really is a matter of personal preference and how you want to see these transactions broken out. All right, so that is how we would record a vehicle purchase in QuickBooks Online using a journal entry. Like I said, as you can see, we have our assets have increased, we have our liabilities increasing, and we have made sure that that down payment that came out of our checking account matched up with the transaction associated with this account. Thank you so much for watching. If you have any questions, please feel free to leave those below.